Hello and welcome back to the Reno-Sparks Real Estate Roundup, this time for August 2023. Is it a buyer's paradise or a seller's dreamland? Join us as we explore the Reno-Sparks real estate market. It's a journey you won't want to miss, and we promise you'll be much better informed. So stay tuned, subscribe, hit that like button, and grab your popcorn. It's going to be fun. This is for single-family residential properties only, does not include lots and land and multifamily, just single-family, so mostly condos and houses. Now, the first stat we jump into, interest rates. Why? Because that usually has the most impact on home prices for obvious reasons. 80% of homes in the Reno-Sparks area are purchased with the use of a mortgage. And as mortgage interest rates rise, the cost of borrowing money and your monthly payments go up. So it becomes more expensive. The more expensive it becomes, the less people can afford, and therefore usually downward pressure on prices. But we're not seeing a lot of that yet. And we'll get to that here in just a moment. But here's a chart of interest rates. We're currently sitting right at 7%. Now, just because we're sitting at 7% doesn't mean you go get a mortgage for 7%. It's usually slightly higher than that. Right now, mortgage rates for 30-year fixed rate are going for roughly 7.25%, 7.5%. It does fluctuate daily, but that's a good expectation. So you can see right here on the right side of the chart, sitting at roughly 7%. Now, I went back to 2000 to show you that the last time we had sustained interest rates of around 7% was actually back in 2001, 2002. And then obviously after that, we started to see interest rates fall for a period of 2 decades. Now, obviously we saw an about-face turnaround and interest rates shot up significantly last year. Now let's talk about the Reno-Sparks area specifically, not necessarily what's happened in the U.S. Now, before I dive into these charts, a couple things to point out. Number one, it does say July 2023, even though this is the August roundup. And that's because, well, as I film this, it's early August and we only have numbers through the end of July. So it is the August update, but these are stats through the end of July. Now you'll see the number here and this says prior period. Now the prior period means the previous month. In this case, it would be June 2023. And obviously same period prior year would be July of 2022. So keep that in mind as you look at these charts. The left side is normally the price. The bottom down here is dates. So as you can see, back in 2013, about a decade ago, we were right around 200,000, and we have seen an upward trajectory for the last decade plus, to where we peaked out at just over $600,000 back in early 2022, a little over a year ago. Now, we did see a small dip back in the end of 2022 into early 2023 this year, and now we've seen a bit of a rebound in prices. We currently sit at $570,000, which is dead flat from last month and down just slightly from this time last year. Now, let's look at total number of sales. 482 total sales for the month of July, which is down 2.4% from last month and up slightly from last year. Now, to be fair, July is generally a very slow month. I don't care if the market's super hot, super slow, doesn't matter, July is always slow. And you would think, well, everybody's saying, oh, summer's the best time to sell. Well, it generally is, but July tends to be a slow month. So not at all concerned about these numbers, although they are much lower than you'd like to see. And that's because we're rebounding from some of the lowest number of sales we've had on record, really in the last 20 plus years. And mind you, 20 years ago, the population was significantly less. The number of homes and developments and everything, as you know, if you've lived here for any period of time, was significantly less. So having that many sales or having similar sales to 20 years ago is obviously down from what would be considered quote unquote normal. And you can see that from the chart over here on the left. Now let's look at closed sales by price. Now again, along the bottom is the price range, and this is the total number of sales. So you got total sales on the left, price range at the bottom. You can see 1 to 2, 2 to 3, and so on. The majority of sales are taking place between $400,000 and about $750,000. Obviously, there's a little bit sold from 300 to 400, but again, those are few and far between. Most homes nowadays, unfortunately, start at the upper 3s and the low 4s, and that's what you're seeing here play out. Now, as you get in the upper end price ranges, you see sales start to fall off. Let's look at active listings. Now, these are actually homes that are on the market today, meaning they've got signs in the yards. You can call your favorite realtor up, you can go look at them, and if you want to buy them, you write an offer and you purchase them. They're active, they're ready for somebody to purchase. That's 856, which is up slightly from last month, but down significantly from last year, where we were sitting at 1,539, so down 44+% from last year. However, we are sitting somewhere near the normal range. It's a lot lower than I'd like to see, but understand, normally we see these peaks, July, way up here in the 12 to 1,400 range. So we actually peaked out in early 2022. Obviously, the interest rates rising was kind of a shock for people, so we did see inventory rise, and then we saw it fall. So we'd actually like to see this number closer up to the 1,000, 1,200 range. So we are significantly lower than would be considered normal. Now let's look at active by price range, and this is where the story starts to get interesting. Remember, all the sales were taking place at 4 to 500, 5 to 6. Well, you can see there's very few active listings, and if I go back to closed sales by price, you can see the majority are selling here, but unfortunately, there's not as many active. So when you have less active homes, you have a high number of sales, that means there's greater demand than supply. That generally puts pressure on prices. But look here, look at the number of active inventory on the market in the 1 million plus price range, really the 750 plus price range. And again, if I overlay the closed sales by price range, look how sales fall off. So in the upper end price range, what I mean by upper end is when you start getting about 650, 700 and above, you're getting less and less sales, and you start to see inventory building. That's the opposite of what we're seeing in the lower end market, which is we have more supply, less demand. That tends to put downward pressure on prices. So it really is a tale of two markets. The lower end, entry level, mid-level, stuff people can essentially afford, and then you've got the upper end area, which is less affordable. Interest rates have a greater impact on payments and mortgages in the upper end price ranges, and you're starting to see that fall off. So that's active. Let's take a look at new listings. Now, what's the difference between new and active listings? Well, new listings are just brand new listings that came on the market for the month of July. Some of these may still be active when you go buy them, but some of them may already be sold. It's just the total number of listings that came on in July. And we're looking at 572, which is down 8.2% from last month, where we're sitting at 623, but down over 26% from this time last year at 780. So pretty much across the board, we're seeing a decline in active, number of listings, and so on. So a tight supply of homes. But let's look at new listings via price range. And you can see significant number of listings in this upper end with not as much sales demand. And of course, we do have a significant number of listings that are coming on the market in the 4 to 650, 700 range down there. Now let's look at months supply. Now this is good, but it can also be misleading. Let me explain how this works. The month supply of inventory is you take the total number of monthly sales and how long would it take you to sell the current inventory on the market. So for example, let's say there's 1,500 homes on the market today, and we sell on average in our area about 500. You'd have roughly 3 months of inventory. 500, if another listing didn't come on the market again, you would take 3 months to sell 500, 500, 500. So this is just a general sort of macro view of supply and demand. And we're currently sitting at 1.8 months of inventory, which is up slightly from last month, but down significantly from last year, where we're sitting at 3.2. Now, normally considered a good, strong, quote unquote, normal market is right around 2.5, 3 months to about 5, 6 months. That's considered fairly strong, decent, solid market, more of a balanced market. When you get under 3 months, you get into what's called more of a seller's market, because there's a ton of buyers, there's very little inventory, and that tends to push prices high. So we are firmly in, just as an overall macro, the entire Reno-Sparks area, we are in what's considered more of a seller's market because of lack of inventory. But here's where the story takes a little bit of a twist. Remember that higher end price range we spoke about? As you go up in price range, you get more and more inventory. And really the story of this market here in the Reno-Sparks area is one of supply, housing availability. And that's something we'll get into in later videos. We don't have time to cover in today's video, but I did want to wrap it up by saying, look, with a tough real estate market out there, the last thing you want to do is throw away money that you don't have to. Don't give away your hard-earned equity. You can hire a real estate company that is full service, licensed, does absolutely everything start to finish for a low fee of only $49.95. And if your home is over $500,000, it's only 1%. So if your home's $600,000, that's only $6,000, which is significantly less than 5, 6, 7%, which is what you might expect to pay a real estate agent. So if you're interested in getting more details on how we can sell your home and save you a whole boatload of money, click on our website, check it out, forrenohomes.com. You can click on the Sell Now button here, fill out a form, and we'll get back to you right away. No cost, no obligation, no pressure. Come out, take a look at your house, give you some pricing advice, let you know what it's going to take to get your home sold, in today's very competitive market, and you might actually be surprised on what it'll sell for. And I know you'll be surprised on how much you'll save, potentially thousands of dollars. So thanks for tuning in today. As always, if there's anything we can do to help you in your real estate journey, don't hesitate to reach out. 775-688-6060, info@4renohomes.com. And of course, the website is 4 Reno, Renohomes.com. Have a great day. See you next time. Bye-bye.
Assist you sell way smarter.